Hey guys, welcome to another episode with me, Shashank Udupa. And in today's episode, I'm going to talk about what happened in today's RBI Monetary Committee policy and what are the different changes that have happened. There's 4 or 5 different news articles that have come out, or 4 or 5 different key takeaways that have come out. And today we will decode what each means and how it actually affects you as well. So today we're going to understand all of this. So stay tuned. Let's go. Now, the first thing is that the RBI has basically increased the repo rate by 0.50 bips, right? Or 0.50 basis points. Now, what does this mean when they say that I'm going to increase the repo rates? That means the interest rates are now slowly going to go up. And we all knew this. Why? Because there has been a looming problem in our ecosystem that the inflation has gone up a bit too much, right? And if you look at the forecast of inflation that they've said today, they're saying that the forecast is going to be 6.7% from 5.7%. And main cause of the inflation, they're saying the major burden of inflation is come on the food consumption. So food products are going up a lot. Now, obviously, the reason why food products are going up a lot started all the way back because of Russia and Ukraine's conflict that was there. Oil prices started going up, and if oil prices started going up, then for you to transport any material, it's going to cost more expensive right now because the fuel prices are gone up. Now, that also means essential commodities will slowly start going up as well. Now, all of these small things started adding up to inflation, and inflation went up from 5.7% to 6.7% is what their estimate is. Now, they increase the interest rates to curb this. Now, what happens when the interest rates goes up? Your home loans, your personal loans, all of these different type of loans that you have taken. And if you are in a floating rate of interest, it will all start going up, right? Because you are in the floating rate of interest category. Now, that is slightly negative for people who have already taken home loans in the past, or in the last 1 year if you have taken home loans, thinking that this is the lowest interest rate possible. It is, but now it will slowly start increasing, and that might slowly create an issue for you as well. Now, the second information that came out was that RBI is linking UPI to your credit cards, to start with RuPay credit cards. Now, RuPay credit cards have been given by a lot of banks as well. But what this is going to unlock is, earlier you could connect your debit card to your savings account and you could use UPI. Now you can also connect your credit card to your savings account and also use UPI as well. So this is going to be a massive game changer in the entire ecosystem. And Visa, MasterCard is also soon coming in this part to actually enable UPI for all its cards. But here there are two questions, right? Number one, when you do UPI, the merchant doesn't get charged anything, right? They don't get this MDR cost that is there. That is why a lot of people like using UPI. But now whenever you use a debit card or a credit card, the merchant, not you, but the merchant pays something called as MDR, which is a merchant fees that they have to pay. Now, it is interesting to see whether this will hamper the adoption of UPI or will it increase the adoption of UPI, because will the merchant be okay paying this extra 1-2% cost that they might have to pay, or will UPI be a reduced MDR rate? Because I know for a fact that RuPay has zero MDR. So for RuPay cards, this is going to be a game changer. But what happens to Visa and MasterCard is yet to be seen. So we will see all of that coming soon in the next few days. Now, because UPI is so famous in India and most of the transactions are on UPI today, and now it's going to be linked to your credit cards, a lot of fintech companies' share prices started going up. So the beneficiaries here were Paytm shares started going up today, and SBI cards also went up. Bajaj Finserv also is in the positive zone for this one. So all the card companies started rejoicing and enjoying because now more transactions are going to come for them as well. So this is a plus point for all of them who, if you're looking at how UPI connecting the dots affect share prices of companies. Now, the third most important thing that came out today was that the CRR ratio was not changed. Now, what is CRR? It is the cash reserve ratio. So, RBI basically tells all the banks that, boss, you need to have a certain amount of cash reserves in your bank account and you cannot lend it as loans. Now, don't forget, banks only make money by lending to people, right? So, they take deposits from you and give you a certain amount of percentage, and then they take a certain amount of that. So, for example, if Shashank deposits 100 rupees in a particular bank, I get some 5%, 6% interest rate through FD, right? But the RBI basically says that banks cannot use that full 100 rupees, right? So there's a certain amount of ratio. So assume that ratio is 20%, right? So the banks can only use 80 rupees of that 100 rupees and not 20 rupees. They have to keep it aside. Now, what the banks are doing, why is this very good and why this news has come out as a positive hit is because we know that the interest rates are going up, right? That means that fixed deposit rates are going to go up. You understand? You agree to that? Now, if the fixed deposit rates are going to go up almost to 8%, then all the people who are investing in different avenues will now start investing in FDs. And if they invest in FDs, Ankur Warikoo is going to get very pissed. But people are going to start investing in FDs because now 8% return looks very attractive, right? But for banks, it is the golden period right now. The reason why that is there is because the CRR is not changed. So they'll get more money coming in as deposits. And now they can start lending more money as well through loans. And if they do that, and if they do lending of loans very positively with good NPAs, then I think they can actually make a lot of money as well. So what people are saying that in the near term, in the short term, if the CRR ratio continues to be unchanged, then banks will have a golden run for the next 1.5 years, until and unless the CRR is not changed. So this is actually a positive for the CRR guys and for the banking guys. Another very important news that came out that shocked a lot of people was that RBI allowed our public sector banks, our PSUs, to start giving out loans to commercial projects and residential products, and even to people who want home loan up to 100%. So now, till now, you could take a home loan, but you have to put 20% upfront as cash, and then the remaining 80% they give you as loan. But now it has come to a point where RBI said public sector banks will boost the credit scenario in the real estate segment, and now we will give up to 100% of loans. Now, if that happens, then the real estate sector is going to start boosting. And we also saw that companies like Shobha, Prestige, all of these companies started doing really well right now. Why? Because now the demand might go up, because now I don't need to put that 20% upfront. I can actually go to a bank, take 100% credit and then go that. But now, there's also a problem here, because if I take 100% credit on this and the rate of interest is now floating and it is going up, then in the long run it might be scary, because a lot of people who don't plan their financials properly can now go into a debt trap very easily. So please be very careful and aware before you are getting a home loan or any kind of loan right now, because the rates are going to go up slowly. Okay, think about that. Another very interesting thing that came out in this entire monetary meet was the digital rupee. So they basically came and said that within this year, we will launch the digital rupee, which is also known as CBDC, right? I made a video on it very recently. You can go check it out. So the digital rupee is coming out. Now, why are they doing this? Because they feel that this will lower the transaction cost. It will give more stability to the ecosystem, and the financial literacy of the country will go up, and we will become very sustained as well. And now with UPI getting mainstream and then digital rupee coming in, a lot might happen, and they're very confident that they will start launching this within the next year itself. So this is also going to be very interesting to look at. Now, just summing up everything, right? The main cause of concern over here for everyone is the globalization of inflation. Inflation is going up, boss, too much, and we cannot stop it, right? They're predicting that 5.7 to 6.7. They're not able to stop it. If they can't stop it, what is going to happen? They want to be more aggressive. They've also come and said that they want to get inflation down to approximately 4%. And to do that, they have to increase the interest rates. So whatever loan amount you see right now, just 7.5, 7.35, whatever it is slowly going to go up to 8, 8.5, and it is going to start becoming expensive. Now, if you take 100% credit limit from the bank, you might end up paying a lot in interest unless you prepay very fast. So please be very careful about that. But inflation has become a big issue. Food inflation has gone even more. Now, what is going to happen is, it is very interesting to see how the stocks that are going to do well in this inflation period are stocks like ITC and FMCG companies, right? Why? Because these guys will pass on that cost to you. Any medical company, any FMCG company will pass on that increase in cost to the consumer. So now, Maggie might still be 20 rupees, right, or 15 rupees, but the grams might reduce. So it might not be 100 grams anymore, it might be 70 grams, but you'll still get the same cost. But the food is going to slowly start reducing because the cost is not making sense. And that is why RBI is on a rant to actually decrease this inflation and try to get it back on track. And this is a slow process, but don't worry. If you are not leveraged, if you are not on loan, basic necessities might go up right now. Your fixed deposit rates might go up. The stock market obviously might react badly. But if we do connecting the dots well in this episode, I mean, we've seen that FMCG companies might do well, card companies might do well for the near term, and even housing companies will do really well in the next few years, right? So it's very interesting to see all of this, what will happen. But again, our job was to just understand the RBI policy today. And if you have any questions from this video, please put it in the comment section below and I will try to answer as much as I can. Anyhow, this is me, Shashank Udupa. I hope you guys like this video. And if you did, just click on that like button and share. You don't have to subscribe if you want to. So don't subscribe. It's okay. Just like and share, and that's enough for me, right? This is me, Shashank Udupa, signing off. Take care, guys. See you. Bye.